Hey everybody, it's Pete. Good morning. Welcome to today's episode of Stocks for Breakfast. So happy to have you here. I hope your family is safe. I hope everybody in your community is doing the right thing. And let's get rid of this pandemic so that we can get back to what we, even a semi-normal life at this point. I want to thank you for joining me today. We're going to discuss a topic that really applies to somebody who has a little bit more experience, somebody who's been trading for at least 3 to 6 months, and they've hit kind of that wall where you know everything, or at least as much as you possibly could know at that point about chart reading, and you're working hard, you're flipping through as many stocks as you can, you're following what you believe is discipline, which a lot of people feel discipline only applies to stop losses, and that's not true. There's so much more that discipline applies to so that you can trade flawlessly. And you just can't get to the other side. You're like, I don't understand what I'm missing. Today, we're going to discuss what you're missing. And just like that, if you follow what I walk you through today, it's going to be amazing at how much more conviction you have in your ideas, how much more confidence you have in your trading ability, where you expect to make money, and doubt will kind of vanish if you follow what I'm talking about today, because that's really the key to the whole video today. And it really is, it's in those moments of decision that make or break you. I mean, and think about this. If you doubt that for a second, think about this. How many trades have you got in that were really good ideas, put the trade on, but you didn't make any money? Those decisions are what we're going to talk about right now. By the way, if you find these videos helpful, please click down and subscribe. That would absolutely mean the world to me. And if you'd like to find out about us trading live together for the next 30 days, click down and learn about the bootcamp, and you'll see how other traders in the bootcamp, what their experience is, and then you can make the decision if it's right for you. By the way, my cat's on the desk right now. He won't leave. He might pop into the video, but we're going to head over to the screen. This is a really powerful video because remember, you're probably making good trades right now, but you might not be making what you want to make on them, if anything at all, which is really frustrating. So we're going to get into it now. Also, if you have any questions about what we're about to review, definitely click down below the video, leave a comment, and I'll get back to you as soon as I can. All right, so the decisions. That's the big thing we're going to discuss now is decisions. What do you actually do from moment to moment, trade to trade? But the most important part of everything on this slide is actually having a trading plan. And believe it or not, most traders have no problem putting together a trading plan. Everybody sees it in their mind as this big daunting task or boring task. But in my experience, most traders who are serious about wanting to make money have no problem putting a plan together. Where the problem is following it. And even deeper than that, let's say you have a plan, let's say you feel like you're following it, the decisions that you make and a little bit of mindset shift are ultimately what's going to help you get to the other side, and hopefully we can fix that today. So we're going to set up a situation where how do you make the right decision in a strong stock that is trading weak, either today if you're a day trader or this week if you're a swing trader. So we want to qualify that now. So you found a stock in your trading plan you determined is strong, but it's trading lower today or lower this week. Which, by the way, if this happens after you get in the trade, so right now we're going to decide like how do you get into a trade and how you make those decisions. But if this happens while you're already in a trade, don't hesitate to pull the plug on a trade that's not working, because the market can be unforgiving. As fast as it can go up, it can go down. You're much better off working the order if it happens to move against you the same way you work an order as it moves in your favor. And that's just kind of a public service announcement there, because I've been getting too many emails from people saying, help me, I'm stuck in a bad trade. What am I supposed to do? That you're supposed to know, before the trade is put on. So first, we're going to talk about if you are a buyer, regardless of the intraday price action or the weekly price action. So remember, these are all about the decisions. So it's strong stock and it's trading weak now. Number one, are you making a decision to buy regardless of the price action because you love the idea? Number two, should you look for another stock to trade? And we're going to discuss if you should and why. Number three, you're going to short sell the short-term weakness in the stock that you just determined was long. And even just saying that sounds silly, but people do it. And number four, wait for the right time to be a buyer again. So 4 different decisions, believe it or not, in one stock. And a couple of them are ultimately what lead to very smart traders finding it very frustrating to get paid, and we're going to discuss why right now. So the first one, strong stock week right now, or week this week, you are a buyer regardless of the intraday price action. The answer in this case is yes or no. Yes and no, depending completely on what happens with the stock, and does it find what you might term a reversal signal within that stock. And I'll give you the perfect example. It's something that we talk about every day in the boot camp, which is a trade that we call a false positive. So you have a strong stock, and it could be a stock that you're looking to swing straight, strong stock that opens up lower and you're looking to initiate a new position. Maybe it tests the previous day's low, clearly obvious support. Maybe the stock opens lower, pushes higher, and now reaches a certain level where it's above the previous day's close. So now it kind of reverses, and now you have new buying in the direction of that longer term move. But the key here is you're not doing that until the stock validates the idea that it was a strong stock in the first place. And the reason I'm saying that is that it's very easy to get caught up in, I'm going to be a buyer of this stock no matter what. And while it's going down, you end up trying to catch a falling knife. The stock never recovers. You take a big loss, and then maybe later in the day or even the next day, you have a chance to buy it at a better price or with better risk profile. And you don't, because you're out of the stock. It pulled back 2%, 5%. And now you're angry, and you lost that money, and you want to leave the stock, which actually leads us to the next one. So again, to clarify number one, the answer is no, you don't buy it regardless, but yes, you buy it if the stock starts to prove itself again. Number two, look for another stock to trade. Now, this is a kind of a controversial one, or one that I get some blowback on. People have scanners and finding different stocks to trade all day. I'm going to be very clear about this one, because this is proven over and over again in the 20 years that I'm trading. I have no problem with intraday scanners if they're calling out ideas in stocks you already have in your game plan. It is incredibly, incredibly difficult to trade a stock that you've never done any work on before, that you've never traded one share before, and feel like you're going to have conviction in that idea. So I want to make that clarification. You can look for another stock to trade if it's in your game plan already, which is very common. You might have 10 stocks in your game plan, you traded one of them, that didn't work out, and you're waiting for another entry, and then you go to find something else that is already in your game plan that matches the criteria to be a buyer. But again, very, very tough to be consistent if you're looking for a stock that wasn't in your game plan. So if you're trading with an intraday scanner right now, and it's pulling up stocks that you've never traded before, or weren't in your game plan, remember, your game plan, excuse me, decided or alerted you to the fact that stocks were strong. Having a game plan in a stock that you've never planned to trade is a very fast path to nowhere. So next, should you short sell intraday the weakness in your strong stock? And this is a really tough one to get over for active day traders. And I understand the reason why the stock might be crashing right now, even though you want it to be a buyer of that stock. But here's the thing. You're trading against institutional order flow, because the very fact that you wanted to be long that stock coming into the day means that you set up an idea where it was obvious that the order flow was a buy, and you wanted to hop on the back of those orders. You wanted to piggyback those orders. But today, right now, the stock is going down. If you're in the boot camp together, and if we're trading together, what I will tell you very clearly is, if that stock you wanted to buy today is going down, find a different stock. You don't want to trade against the institutional order flow. Sure, it's very easy to recognize the one time out of 10 where the strong stock is going down and you could have possibly made money that day, but you're focusing on the wrong thing. You should be focusing on the 9 times out of 10 where buying or finding a spot to buy that strong stock catches a bid again and then rallies back in your favor, and it becomes an easier trade because you're trading with the institutional order flow. Next and last, wait for the right time to be a buyer again. Yes, obviously that's the highest probability. So number 1 and number 4 are kind of tied together. So what's the right mindset for doing this? We need to really understand the 3 core parts of what's going on in the trade. There's probabilities, there's risk, and there's leverage. So first is probabilities. It's the odds of something happening over time or a large sample size. So in trading terminology, a large sample means that it's a large amount of trades. What we call in the boot camp is you're allowing your edge to do the hard work. And that's, if you're stressed out of your mind in trading right now, that means you're trying to do the work. Stop trying to do the work. When you understand what it means to have an edge, when you understand how to read the tape, all you're doing is looking for entries and managing positions. There's no hard work at all. It's really just simple decisions of scale in, scale out, or book profits. So, by the way, that also reduces the stress on a trade by trade level, because when you understand a large sample size is really what trading is about, not trade by trade by trade, you stop driving yourself crazy over what happens on one trade. All right, next, risk is the potential loss of your career or your trading account, which I've seen both happen to pretty smart people who tried to be right. So the key here is when you go into a trade, you need to accept the risk in exchange for the probability of profit. So what we talk about all the time is, can you justify the risk because the probability of profit is very high? Many traders put on trades only because they could see the risk, as opposed to there's a good chance of making money. There's a very big difference between the two. And last but not least is leverage. And this is an interesting topic because leverage is typically a multiple of the amount of money you have in your account. I get the question all the time when new people come into the boot camp, should I be trading with leverage? And that really depends on your experience. You probably should not be trading with leverage while you're learning, because it can be very expensive. You're basically multiplying how fast your mistakes are going to be multiplied if you're trading with leverage and you know how to handle it. If you do understand leverage, then there's a very big, oh, I just caught a mosquito. There's a very big reason to use leverage, that will multiply in a good way how much money you could make, because you understand how to trade with leverage. So anyway, next we're going to get into understanding probabilities, buying and selling versus risk and reward. So probabilities is the odds of something happening over time. So remember, the odds of something happening over time means stop focusing on one trade, focus on how you did over the last 10. That's the way we focus on it in the boot camp. Over time or a large sample. Large sample is probably a better way to word it, because over time really doesn't matter if you place one trade. Trading is not gambling, but it's incredibly important to understand how they're similar, in the sense that gamblers have a small edge and they allow that edge to play out over time, and you need to flawlessly get a large sample size, a lot of trades or a lot of bets that allow your edge, again, allow your edge to do the hard work. Every trade is your assessment of the risk you would take for the potential reward. So here's the key part, every single decision. So if you think about what I was talking about before at the very beginning with all of those little decisions you make, you have a really good idea and then you have a whole bunch of decisions. Those are all related to accepting risk every single moment in the context of reward. So you constantly have to be saying to yourself, is the reward still valid? Is my idea still valid? Which actually is a really big part of learning how to be a trader. Getting stopped out of a position in a trade that will probably give you money, get back in. That's where a lot of, especially newer traders in the boot camp, once we get them over this hurdle where there's nothing wrong with taking a loss and getting back in, all of a sudden they're making money on those trades that they gave up on. And the entire story changes dramatically in how much money they take home every month. So for example, shorting a double top versus buying a pullback in an obvious trend. Shorting a double top means that you're trading against obvious order flow to the upside. And that means you can see your risk point, but that doesn't mean the probability of profit is great, versus a stock that goes up and pulls back and you're buying into that bigger move to the upside. So how do you apply all this? How do you apply probabilities in the right mindset? There's certain scenarios that simply have a higher probability for potential, for profits, right? That's really what we're setting up. If you understand nothing else from this video and you're having your confidence shot in this market that's kind of flipping back and forth, that's happening because you're very likely taking trades that are not good ideas, losing money on those trades, and then you're doubting your ability. I'm telling you right now, if you have basic charting knowledge, it's really just a question of moving from chart reader to tape reader and understanding how to use it better. That's really a big part of trading. So this means you should risk more to earn more when the probabilities are higher. And if you did not earn money on this trade, it was still the correct play. And that's a hard thing for some people to understand, is losing money on a good idea. That's perfectly okay. As we call it in the coaching program, we call it nothing more than a business expense. And when you really get to that point where you understand that, trading becomes a lot easier. So basic setup for determining your trade expectation, it comes down to this: obvious order flow. And this is very purposefully built, where there's a solid foundation and it gets thinner and thinner on top. Once you have that foundation on the bottom, everything above it becomes easier. Obvious order flow for broad-based sector, the general, the market, and stocks. Order flow is obvious in specific sectors or industries, and then you have stock-specific order flow. So once you understand, you work at that base where you're looking for obvious order flow, that's first setting up the probabilities. Then when you work your way higher, then you're really just fine-tuning entries and exits. And really, ultimately, what happens between entry and exit is what makes you a trader. And you'll know you're a trader when you can actually take money out of the market on a consistent basis. So I hope this kind of sets up what really should be going in your mind. And it's really those decisions that you make from moment to moment, which includes what goes into your trading plan, which stocks meet that trading plan, and then you have to flawlessly trade those stocks. That's really where a lot of traders lose their confidence, is because they take trades that aren't good, and then they think they're missing something, and they start to doubt themselves. And you shouldn't be doubting what you know. You should be doubting, or you should be working, not doubting. You should be working on how you should be working towards flawless execution, and then allowing your edge to do the hard work. So a lot to unpack here. This is kind of like a higher, maybe a little bit more of an advanced topic. But if you understand that your number one job is setting up great ideas, everything flows from there. It's really just that some people don't understand what an A+ trade is. So anyway, if you want to find out, definitely click down and learn more about us trading together. If you find these videos helpful, please click down and subscribe. That would be awesome. And definitely leave a comment. If you have something you'd like to see reviewed or a question about what we covered, definitely leave a comment about that too as well. Have a great day, everybody.